Well, hello and welcome. Welcome and hello. Hello and welcome. Welcome and hello. Pardon me. Thank you for joining me on this extremely special edition of Un Poco Moss, the show where we give you just a little bit more, guys. I want to talk once again about CRISPR, ticker symbol CRSP, CRISPR Therapeutics AG. Of course, one of these newfangled gene editing companies. They've already got an ex vivo therapy approved. They're working on a fairly expansive in vivo pipeline. Basically, guys, what's up? The great Naughty Lurker has joined us, the greatest wrench in the history of U-Turd. Incidentally, guys, hello and welcome. Sorry, guys, I've just been on the phone and just totally dentist. It's just one of those days, guys. My voice is shot, but I'm going to do a super quick video here about CRISPR because I look at setups. There are setups, and then there are setups, and this is one of those instances where not only are they shorting the stock the last 2 months, but they're shorting it at aggregate short volume ratios in the high 60s, low 70s. And today they went after it. I mean, today they went after it at the highest rate, I've seen. Just try to give you guys the data, and then I'm going to get out of here because I'm blue in the face about, why I think someone would want to acquire this company. Why I think another company would want to make a deal for one of the therapies, like Vertex did. Why I think they're going to have, anywhere between 2 and 4 readouts in the second half of this year, which could send the stock higher by, 10%, 20%, 30%. Why, the readout they just got in terms of their cardio drug. They have basically the autoimmune side, and then they have the cardio side. And the readout was like incredible, 80% reduction in like bad cholesterol. You read the data for yourself. It was just, and this is not like in mice or something. This is real data in people. So it's just nuts. In any case, let's see. Let me see here, guys. I got a bunch of stuff going on today, work-wise. What's going on? It's the great Adam DeMonico here, the sourdough bread king. Adam DeMonico invented those sourdough chowder bowls. You have on Pier 39, I believe. The great Adam DeMonico, DeMonico's restaurant, fifth generation restaurateur. A triple threat, really. Anyway, we all know Adam DeMonico, the great family history there. Thank you for joining us, Adam. Lisa, great to see you, Lisa. We have the great Jesse. I don't know how great he is. I don't really know anything about Jesse. He's new here. He just has a J, so we don't really have too much to go on, but we assume he's okay. We have, of course, the Mattress King of Chicago, the great Carl Seamark. I know, man. I wish I was bald. I wish I was a bald billionaire. I could just funnel billions of dollars into a charitable trust. Anyway, hello and welcome, guys. Tune Poco Moss. They call me cornbread because I'm moist dough and I crumble under pressure. They call me the tugboat because I am short in stature. I pull more than my own weight. I rarely go far from my own port. They call me Stubby Cohiba because I once accidentally cut my penis off with a Vitamix blender while living in Miami, Florida. So call me Stubby Cohiba or Stubby Macanudo, depending on what day I'm doing this bit. They call me Stock Karen. They call me Hurricane Lopez. They call me the Fat Tennis Ninja. They never call me late for dinner. That's the only play I have world-class sprinter speed when they ring the old chow bell. You ever seen a fat guy move like that? No, I haven't. No, I haven't. Also, chili cook-off. So, guys, I forget what I was. I keep getting texts and emails. I keep looking at them. I shouldn't. It's no way to conduct a live broadcast, I'll tell you. But so what happens today, guys? Okay, so they're shorting 73%. This is the highest it's been all month. This is the high. I mean, that's about as high as you can get. It's about as high as I've never seen sustained shorting at these ratios in my life on a stock, unless the stock's like going bankrupt, like a Nikola. Everybody's just shorting it. This company has a great cash position, a great pipeline. I've said all that. I'm not going to go through the fundamentals why I believe this is just so foolish. But today, guys, if you look at what happened, there's another drug, the similar drug that this Verve Therapeutics had. They got bought out 1.3 billion by Eli Lilly. Why that's important for CRISPR has a similar, drug they're working through. That's what I was just talking about that showed those 80% reductions. Extraordinary data. Who wouldn't want a piece of that? Maybe they can't buy CRISPR outright, because I don't think CRISPR would sell themselves for less than, I don't know, 15 billion, something in that. I think the CEO believes, or the management believes, that the company is just dramatically undervalued. I remember a couple of years ago, I think the one of the founders was talking about they thought the company was worth at least $150 a share back at that point. So I think they've proven a lot since then, but this is a very slow rolling sort of glacial industry. But shorting on tilt into extremely bullish sector momentum now, because you have big pharma. They got their checkbook out. They wrote the check. They're like, we're going to pay for these therapies, even if they're not, FDA approved. I believe that one is going into phase 3. So it is, and CRISPR's is in phase 1. So they're further along, but I don't know if their data is as good as CRISPR. Obviously I have to, do my due diligence, but I'm just finishing up some work. So I was trying to just get you out the data, but they have another thing why you shouldn't buy Editas, but that's neither here nor there. I'm not buying Editas either. I'm buying CRISPR. If you look at the short, yesterday it was basically neutral. They returned 86,000 shares, and then today they just went on absolute tilt, borrowing almost 1 million shares, and you see cost to borrow spikes back up and is just very controlled at this 2 level. How do they borrow another 1 million shares when there's only 40,000 shares available? Of course, you have to take all this data with a grain of salt. You just have to sort of look at the trends. It's not exact. Obviously, the shorts are the longs in many cases, like, Citadel, Jane Street. They're both short and long. They're running, sort of these options, plays, straddles, strangles, all these other, fancy words that the smart people like Invest with Henry from Goldman Sachs, can talk to you about. But, oh, God, so much neck pain today. I feel like I got run over by a truck. Anyway, guys, I got to keep looking at these. Sorry, I got a bunch of stuff going on. Oh boy. Okay. Let's see. Okay, sorry about that, guys. Just tons of stuff going on end of day. But so you see the shares on loan, 27 million worth. The short is worth 860 million, but remember, there's an additional, 6 million shares on loan that aren't accounted for. So that's more than, like 1.2 billion or 1.1 billion or whatever it is. So they're keeping the cost. These numbers don't jive. Cost to borrow 1.25 and 100% utilization. If utilization was truly 100%, they wouldn't be able to keep borrowing. They wouldn't be able to keep shorting. But I've never seen shorting this heavy. I mean, the only saving grace is that volume has been pretty low. But if you take a look at the chart, guys, look what's happening here over the last couple of years. You see all through 2003, 2002, they walked this down. Volume is very, very low all the way through here. And then it spikes up on this huge pump that, so many stocks, underwent here. And then this huge dump is on much lower volume. And then what you see is just steadily volume. It just starts to build up. All the biggest candles here, when it's going up on green, I think this is controlled. I think this is really the end of the line here. That's my opinion. I think as they walk these things down, they reach a terminus. I mean, when it comes off the bottom, it usually, historically has tested that. You see it just bouncing off the top over and over and over, coming nowhere near the bottom of the channel most times. It's more got another support line working in here. But this was just an extra special dump in the pants. But even if it just works its way up to here, which I think it's going, just this short, the tension in the short, the loaded spring is just absolutely ridiculously unheard of. And if you look at the fund short in CRISPR and you sort these out, you see the number one market god of shorts, Citadel, reduced their put by 50% in the last filing. So they had, you know, 8. And like I said, they're shorting from 70. All these other idiots, their average short, most of them is in the 40s. Some like IMG Chicago 87. So they're all over it. Group 1, Simplex, you know, they're shorting from much higher levels, 79, 92. But a lot of these shorts, you know, they're shorting heavily, and they're shorting from just over this level or just about this level. So you think it would have behooved them to cover when the stock was just around 30, you know, April 24, end of April, or 33 back in May. But since that, you know, April 24, when the stock's sitting around 30, you know, we're up like 45%. So they've been absolutely slaughtered off that low. And remember, they were shorting heavily all through May. $10 less than this, $8 less than this. This is a huge move, but yet the cost to borrow remains almost zero. So you don't have to pay the piper until you actually close out the position. It's just, you know, paper losses right now. So that's what I'm trying to see. Where are they? They were looking at this negative sector momentum, just keep walking this thing down. Looking, you know, at Editas going bankrupt, looking at that safety failure with Telia or whatever. I forget the names of a lot of these companies. There's so many of them, so many stocks to follow. But how do they keep shorting aggregate short volume ratios, you know, high 60s, low 70s every single day? I know a lot of it's naked shorting, and they cover overnight, and the shorts are the longs, and there's all sorts of shenanigans, things at play I don't understand. But I'm looking at just the totality of things, the bullish sector momentum we see coming in, the distinct uptrend, you know, that if you just look at where this is coming, you know, the stock is clearly making, you know, coming from where is this, April. It's making higher lows. It's making higher highs. It's moving up to this line. I think it's going to move up past this line. Eventually, you just lose control. But you see, you know, the last time momentum or the last time volume popped up, this stock just made a huge move up to the upside. You know, you see it's touched 90, sitting at less than half of that. Readout coming, partnership coming, buyout coming. Who knows? And they're borrowing 27 million shares out of 80 some million that exist. Institutions own, you know, a huge percentage of the shares, and big pharma owns the rest. I feel like these shorts are just shooting themselves in the wiener. But perhaps I'm just not smart enough to understand what they're doing. And perhaps I am, and they're just arrogant and late. And, you know, companies like Citadel are on top of their shit, and they're going to make a ton of money, and they're going to leave a lot of these, you know, hack shorts to get slaughtered on the run up. And I think if I don't miss my, guess, I don't think it's a guess, but I can't remember. There's so many things to watch, guys, and this isn't my job, believe it or not. But I believe I saw BlackRock increasing their position. I might be wrong about that, but yeah, BlackRock. No, they decreased 5% in the last filing, so they still only have, you know, 2.6 million shares, but their average cost is 56. You see ARK with a ton. Some of the bulls are decreasing their shares marginally. UBS, huge increase. ARK obviously buying. It's great to see Vanguard increasing their shares. Those are like I said, those are the two masters of the universe that I just would follow, you know, into battle anytime, is basically following their coattails. Vanguard and BlackRock. Vanguard and BlackRock. Especially BlackRock. BlackRock controls the trading universe. They control the price action. They control everything. They know what you had for lunch today. They know what you're going to buy and sell tomorrow. They know what you're going to buy and sell next year. They know you're an idiot. They know I'm an idiot. So anyway, that's neither here nor there. But I was going to keep this short, guys, but I'm just telling you, this setup is just completely out of whack. It doesn't make any sense. Again, they have almost $2 billion in cash, less than 10% of that as far as debt, short term, long term, any term. Their money's wisely invested. They get gains from that. They have, an endless runway. There's going to be deals. There's going to be readout. I mean, one good readout on the in vivo stuff, and that sends these stocks up like 20%. What are the shorts going to do? They were shorting from 30 at, 68, 72% ratios, whatever the hell that means. I don't know, guys. What's up, Katie Wentworth? Reading an article about CRISPR trying to remove that extra gene that causes autism. I don't think they know that there is an extra gene that causes autism, Carl. I really don't think they've narrowed that down. But maybe I'm wrong. Maybe I missed that one. What's going on? The Great Not a Lurker, of course. Katie once again. Jesse. It's really hard to say, Jesse, because I think they're huge bullet. I mean, shorting SMCI at this, you could understand it because of all the accounting stuff. They would think, oh, it's all fraud, but it turned out to just be a big, mouse fart. Turned out to be a mouse farting into the ocean, a mouse farting in a hurricane. It was just a bunch of FUD. I mean, all the sales were real, the growth was real, the profits were real. Probably, some stuff they did around the periphery, very small stuff, their family kind of improper and different stuff like that, but it didn't affect the core of the business at all. Probably some minor ethical lapses, not following proper accounting regulations. But the wigger, they slapped the wigger on the wrist. He sold half his shares, and they didn't fire him. They didn't hire a new CFO, as that committee lady told them to. So we're going to follow all these recommendations, besides the most important one. Thanks, Uncle Chucky. You sack of shit. I trusted you. No, I think that CFO is very smart, and he probably does an incredibly good job. That's why they don't want to get rid of him. And I don't know if, the salespeople trying to push commissions forward and Uncle Chucky trying to enrich his siblings and not pay taxes and stuff like that and cheat on export restrictions. Is that the CFO's fault, or was he just a convenient fall guy? Like that team the Harlem Globetrotters always plays. Washington Senators, I believe. Oh, anyway, this show sucks. The show just got better. Hello, it's the great Princess J. The show just at least got a little better. If you were here and talking, it might get a lot better, but you turds are stuck with me. Anyway, then they launch it. I can honestly SMCI, penalty box. Anything could happen. They could definitely have more difficulties. I know their auditor gave them a bunch of shit even this last time. They barely got the financials out on the very last day, like stroke of midnight, like Cruella DeVille turning back into a pumpkin or what have you because her feet are too big and she has a bunion. She can't fit that high heel on. It's a whole situation. Her stepsister can't get on. They smash her in the head, shove the stiletto in her eye. It's just an all-out Mad Max style brawl. Tina Turner's there with bleached hair, metal bra, a la Princess Leia. Oh, high times, I tell you. Another shout out to Princess J, absolutely. Huge shout out to Princess J from the Great Not a Lurker, the Great J Money. Guys, I will be not making my limited edition Canadian FinTech Mafia hat available. I will not be making it available, I should say. Canadian FinTech Mafia is completely taken over the FinTech space. They're just like, I saw, it was really actually a good show. I was watching a little bit of the show the other day. They were doing some kind of like stock draft, and I was looking at a lot of good stocks, actually very kind of interesting programming. It's like, sometimes the Canadian FinTech Mafia can be just a touch dry. For my taste, a lot of facts and figures. But that was a fun show. But nobody drafted SoFi. It really pissed me off. But the Canadian FinTech Mafia, they control most of these stocks. They control YouTube. They control Sergey. They control everything. They control the private jets. They control the Gemini. Mostly Tevis pulling the strings, running a team, managing a course. Anyway, the Canadian fintech mafia, it's a real thing. But if you can't beat them, join them. And if you can't join them, make a puffy letter hat from Amazon. Make a puffy letter hat for like a few dollars. I'm making a Payush puffy letter hat. But I'm working up a SoFi video. That's why I've got the Canadian fintech mafia hat. So I'm going to basically be talking in the SoFi video about what is actually durable competitive advantage, because a lot of people don't seem to understand like the basics of how you build a business. Like, it's not the bank charter that's necessarily your durable competitive advantage. That's the mechanism, but it basically your lower cost of money is the durable competitive advantage. Doesn't matter if you're loaning money on credit cards or home loans or a home equity line or a personal loan or a refi of a student loan, your cost of money being 2% less across the board forever than your competitors is a durable competitive advantage. It's a moat they can't cross. It's a barrier that means what you do, vis-a-vis your competitors, you can do at a much lower cost and therefore a much higher profit margin. So I'm like, Anthony Noto kind of made fun of these, like the Robinhood launching this like gold credit card with giving away so many bonuses. I think it's going to be a drag on the company, but Robinhood's crushing it. I mean, I'm not trying to I know the stock's been way up. I'm not trying to, dump on Robinhood, but I'm just, I'm a SoFi guy, obviously. So I'm going to go into it. That's not their only durable competitive advantage, is the people like, oh, the bank charter, it's boring, it's old news. This is just getting going, guys. There's going to be synergies between this loan platform. And if you look at the relationships they're building with these big institutional companies that, broker loans and hold debt, these life insurance companies. I don't think many of these blue chippers would touch some of these other finturds with a 10-foot pole. Now, I know a firm has been, can make deals to sell off, but I think SoFi is the top tier of the top tier of the top tier. At least it will become that durable competitive advantage in terms of being. A lot of this goes back to their reputation, how they built their business, but name record. I just look at some of these other I feel the businesses are very vulnerable to the fickle nature of the mob. If so much of it is tied up in trading, crypto, option strategies, perhaps that's a flavor of the month that'll go somewhere else. SoFi is not tied up in all that. SoFi is, longer term loans, home loans, student loans, personal loans, building long-term relationships. They're trying to get the most amount of money over the lifetime of their customer, but that means keeping the customer for a lifetime. It's that wheel strategy. And I don't think that's easily duplicated. I know as well, Robinhood's offering banking services, PayPal's offering checking, all this. I think the way SoFi builds it, the reputation, the advertising, the partnerships, I think that will be a durable competitive advantage. It allows them to build themselves into an online mega bank, tech company, AI company, genie in the bottle, if you rub them the right way. So I'm going to work on that, but I do have my Canadian fintech mafia hat at the ready in case I ever actually do finish that video, which I probably won't. These lunatics are shorting CRISPR on tilt. I can't figure it out. They got a ton of cash, huge runway, great product. Buyout deal could be in the offing. Good readout could come any day and just slaughter these shorts and send the stock absolutely screaming up higher. But doesn't matter. It just doesn't seem to matter because they think they can control the price completely on low volume. And that only works as long as all the bulls are cooperative. And they want to accumulate. There's no more shares to accumulate. There's no more shares to accumulate. I mean, at a certain point, the jig is up, the game is over, and they're going to send this thing up. Because they're not buying all these shares. Kitty Woods isn't buying all these shares to lose money. That's not what she does. Well, quite often it is. But anyway, guys, this show's terrible. Thank you, Not a Lurker. Thank you to the great Princess J, the greatest ever. Thank you to the great Alberto Berti Avalos. He's here. Thank you to Jesse, Uncle Jesse, Duke Boys, Daisy, the rest of them. Roscoe P. Coltrane. The rest of you fine people. I don't know who else is here. The great Carl Seymour, Katie Wentworth. Who else is here? Lisa S.H. Oh, yeah, get over to Flint Creek Soap Company. Buy you something. There are like 3 of you watching. Buy some soap. I'm going to do a proper plug on my SoFi video because I actually might get some views. Anyway, guys, I was supposed to be talking about CRISPR. I don't really know what I was actually talking about, but institutions own just the entire thing. So this is just, it's basically extraordinary. To short, I can't figure this short out. Institutional longs says 89% ownership. I think that's inclusive of all those big pharma companies that own the stock. You can see that where is it? Holders. No, I think it's under insiders. And you can see, like, again, Bayer owns 6%, Vertex, who's their partner in Casgevy, owns 6%, Celgene owns 4%, GlaxoSmithKline owns 3.51%. Any one of those 4 could make a deal for part of their in vivo pipeline any day, sending the stock doubling or more. You just don't know. But these shorts are willing to take the chance. Every single day, they're willing to, bet their testicles on a cut of the deck of the cards. So my hat is off to them. They got a huge set of brass balls on them, but they got short wings, so the universe tends to balance things out like that. Thank you so much, guys. It's Un Poco Mas. It's Danny. What are you going to do? I'm out.